Well, for a closer look at the latest from Mauritius, we're crossing over to Anthony Withers, Banking Chief Executive at MCB. Anthony, thanks for joining us today. So here to tell us more about changes when it comes to the bank structure right now. And of course, I suppose you can tell us more about the strategy behind that. But raising a 10-year subordinated loan today, just tell us a little bit more about that loan there in terms of how much capital has been raised and really what the thrust of the strategy behind the new debt raising is.
Pleasure. First, may I say it's really nice to have CNBC covering Mauritius and to be able to do this interview from Mauritius. So very well done to CNBC Africa. Turning now to our bond, we announced back in March that we were going to separate the banking activities from our foreign subsidiaries and also our non-banking activities and establish 3 separate clusters. And a key part of this restructuring of the bank, which is due to take place later this year, was the raising of additional capital to replace the capital that would go with the various assets into the sister subsidiaries. Mm-hmm. So we launched a 10-year floating rate subordinated bond. We aim to raise 4.5 billion rupees, which is about $150 million US. The books closed on Friday afternoon, and we have raised 6.3 billion rupees, split broadly 50-50 between retail investors and institutional investors. Mm-hmm. So we now have to sit down with the stock exchange because the notes will be listed and decide on how the scaling back will take place so that we end up with the 4.5 billion that we mentioned we would raise in the beginning. It's a very important bond issue for the bank. It's got a 10-year duration. It's Tier 2 capital, so we'll be able to have it count towards our capital to asset ratio, which is determined by our regulator, Bank of Mauritius. Mm-hmm. And we're absolutely delighted with the response. And we think that it will establish a benchmark bond issue in the fledgling corporate bond market in Mauritius. So mm-hmm. for all those reasons, we're delighted with the response, and we'll be notifying investors of the scaling back in a few days' time, probably towards the end of next week. Allotments will then be made on the 8th of August, and the bond will be listed on the stock exchange with effect from the 16th of August. A
lot of key themes to pick up on there, but let's talk about MCB and basically what you're aiming to do is separate various banking activities. So run us through how that's going to work and what as I say, the rationale behind this new strategy is.
Right. Up until now, the bank has been the holding company, and it houses not just the bank in Mauritius, which is the deposit-taking institution, and the lender to both the retail and the corporate segment, but it also houses our presence country subsidiaries in the Maldives, in the Seychelles, in Madagascar, in Mozambique, and we also own half a bank jointly with Societe Generale in Reunion, the neighboring island. These will be separated out into a banking cluster, a capital markets cluster, and then an other investments cluster. On top of this will be a new holding company, the name of which will be MCB Group Holdings Limited. And this, of course, has to get approval by the court for a solvent reorganization, and then it has to go before our shareholders at the annual general meeting, which is held typically in the last quarter of this year. Once all that has gone through, we're looking to have the new structure up and running in the first couple of months of 2014. Mm-hmm. And the main purpose of the restructuring is to give greater clarity to the different activities of the bank, but also to establish quite clearly that the depositors in the bank are placing their money in an institution which is separate from the other activities of the group, which, as I mentioned earlier, we have equity investments, we have a wide range of non-banking subsidiaries, as well as the presence country banking subsidiaries.
Mm-hmm. From a banking operation right now and the ability to grow your lending book, tell us about the impact of new regulation on a bank like Mauritius Commercial Bank, which of course dominates in the Mauritian market, certainly has activities in all the geographies you've pointed out. Of course, this bond certainly goes towards boosting capital ratios, but to what extent are you finding it more and more difficult to grow business as a result of capital rules?
We've always had a very strong capital ratio in Mauritius. I mean, the whole banking sector has strong capital ratios. The regulator sets a minimum ratio of 10%. We're comfortably above that. We're close to 15%. and we aim to keep it that way. We believe that it's appropriate for an upper middle income emerging market country to have a strong capital ratio. Sends a good signal not just to staff, to customers, to government, to rating agencies, but also to correspondent banks. And that will not change, and that's why we're raising this 10-year subordinated note, which is to replace the capital that will be distributed to the sister subsidiaries once the restructuring takes effect. Mauritius hasn't done badly over the last few years. It's had GDP growth of between 3 to 4, and a couple of years ago close to 5%. So in comparison with a wide range of other countries, it's not doing too badly. And inflation is nestling around 4% or so. So nominal GDP growth is about 7 or 8. And we generally benefit from that to the extent that working capital facilities usually increase by that sort of level year on year. And we're also quite we're quite forward-thinking in the way we're deploying technology and introducing new products for customers, both on the corporate side as well as on the retail side. We've recently introduced a mobile payments platform, which is going down extremely well, I'm very pleased to say. Bank of Mauritius to introduce that, and that continues the pioneering role that we've had over many years in terms of deploying technology for our customer base.
Yeah.
So yes, growth is a little bit sluggish, but it's still moving along, and we're increasing our lending portfolio. We're matching that with taking increased deposits, so our loan-to-deposit ratio remains comfortably under 100%, which is a key metric for us. We have no dependence on wholesale funding. We're doing the subordinated bond issue primarily to augment our Tier 2 capital base. And the bank, therefore, has a very solid structure and a very solid business model, which it hopes to use to finance further growth and expansion in all segments.